Do you want to learn more on how to put money to work in regenerative food and agriculture? Follow our video course via investinginregenerativeagriculture.com/course or in the links below. Now, on to the podcast. You're going to listen to a conversation about agroforestry and how to finance the planting of trees on a farm. If you're interested in people building vehicles to scale up regenerative agriculture space and build soil, this is the interview for you. We discuss why agroforestry is so interesting, but also so challenging, and why chestnuts are amazing. Enjoy! Welcome to another episode of Investing in Regenerative Agriculture, Investing as if the planet mattered. Podcast show where I talk to the pioneers in the regenerative food and agriculture space to learn more on how to put our money to work to regenerate soil, people, local communities and ecosystems while making an appropriate and fair return. Why my focus on soil and regeneration? Because so many of the pressing issues we face today have their roots in how we treat our land, grow our food and what we eat. And it's time that we as investors, big and small, and consumers start paying much more attention to the dirt/soil underneath our feet. Before we get started, I've been recording these interviews next to my day job, and I will definitely continue to do so and release about an episode a month. But at the same time, I would love to take this further, share more interviews. There are many more stories to share on investing in regenerative food and agriculture. More depth, improve the quality, maybe even doing some video series. So I started a Patreon community, which makes it easy to support creators like myself. If these podcasts have been of value to you, and if you have the means, I invite you to support me and make this happen. For more information, please find the link to my Patreon account in the description below. And now, without further ado, the interview. Enjoy! Welcome to Investing in Regenerative Agriculture, Investing as if the planet mattered. I'm Koen van Seijen, your host, and today I'm talking to the three co-founders of Propagate Ventures, completely focused on introducing agroforestry in existing operating farms. Basically making sure farmers plant many more trees on their land. I'm really excited to learn more about their work and ask them all about the nerdy details. Welcome Ethan, Jeremy and Harry.
Thanks for having us.
Excited to be here.
So to start with a personal question, and we're going to keep it brief because otherwise we'll spend the next 2 hours on this, but how did you, the three of you, actually end up individually on the soil, and how did you end up, the three of you, working together on soil?
Yeah, it's a great question. It goes back far into the roots. This is Jeremy here, just for the viewers to know voices. So my roots are actually a family business in and around stair and railing manufacturing, which was intimately connected to kind of the housing markets, and through my family, intimately connected to the timber industry. From there, kind of got a little bit of the start in and around trees and what they do for the market, and then went to college, started working on organic lettuce and grass-fed dairy farms. After college, took a stint in San Francisco working for a few innovation firms, learned how to design software and build software, moved back to New York and survived my software life to return back to working in agriculture and wanting to try to shift that system. And that kind of led me back to my roots, wanting to work with tree crops as a result. There's a longer story there as to how Propagate Ventures kind of came into being, but I want to give these two guys an opportunity before we jump into how we came together.
Hi, Koen. Thanks for having us. This is Harry here. So I was an athlete for a good amount of my life. I was an Olympic hopeful up until 2015 in the sport of modern pentathlon. So my performance was dependent on the quality of food I ate, and the quality of food I ate was dependent on the soil that it was grown in. And burning so many calories, I not only had to ask where my micronutrients came from, my fruits and vegetables, but also where my calories came from. And that led me to look into broadacre agriculture and the status quo of where humanity's sustenance is grown. And I grew up at a summer camp, and that land stewardship ethic led me to want to make farming more sustainable, more regenerative with tree crops, having grown up in the forest. And my background is in finance. So working through the time value of money and combining traditional finance with forestry applied to farmland. That's really where this idea of agroforestry finance came from.
And I'll hop in here. This is Ethan. I guess last but not least. So my background is been working with startup companies and consumer brands on their sustainability strategy, all through the course of small little startup companies through to larger brands like the Super Bowl. And so I had an opportunity to see a lot of the movement in the space of impact investing, in the space of social entrepreneurship, and how brands, specifically consumer brands, were playing a role in the next phase in which we're looking at a sustainable future. And one of the things I had started to look at through that time was what were the leverage points. Really focused on the renewable energies and clean tech space for a while, and the movement we've seen there, especially in the impact investing front. And then what is the next leverage point in terms of the impact that I think we'd all like to see take place. And that led me into agriculture. And I think the three of us all had an opportunity to engage with agriculture based off of the food we were consuming through health concerns, or from on Harry's side of the coin, the importance of the nutrients for athletic performance. I'm diabetic, so the nutrient value of the food I was eating, I found was intimately connected with what I've been saying is, if it's healthy for the earth, it's likely also healthy for me to consume. And that is one of the ways in which the three of us really came together and understood some of the leverage points in which to intervene in a system that has an opportunity to create solutions rather than cause problems. And that's agriculture.
Yeah, that makes extreme sense as a leverage point, the land that we have. So I want to ask the question, so from that, how do we make land more sustainable? How do you get to agroforestry and introducing that?
Yeah, so as an organization, we're at the kind of the onset of the research that led us to agroforestry. We did a lot of travel, talking to farmers across the U.S. And around the world, across from anywhere from France down into Brazil to Argentina, and a lot of what we were seeing in terms of the motion of the industry of farming and how things were moving was toward some of the regenerative solutions in soil. So that be no-till agriculture, grass-fed, holistic managed grazing. And what we found was there was a little bit of a gap in areas where land was naturally forest land, but it was still in productive agriculture. So we kind of saw that there was a missing void in this regenerative movement to be able to make tree crops a profitable layer to the farm landscape. There are a few pioneers that have done this across the world in terms of their research over the last 40 years that have really kind of gone through the process of feeling into what works and what doesn't, failing, and we have a lot of their work to attribute to. What we found was that for most farmers, putting their money into tree crops for a long-term investment was too big of a risk relative to their cash generation, whether it be cattle or annual grain. So what we wanted to do was to give them the capacity to be able to potentially put those trees in the ground without lowering their upfront risk. And that was a real discovery process over the course of a year of talking to a lot of farmers across the entire industry, looking at where the gaps were in investment for deployment of systems that were regenerative. Agroforestry as a whole, in terms of the general practice, we landed on primarily out of its regenerative capabilities in terms of its both production from an economic standpoint, as well as production from an ecological standpoint, to be able to regenerate soil, as well as sequester carbon, prevent nutrient runoff, prevent soil erosion, things of that nature. So it was a real journey in conversation to get to where we are, where we landed on agroforestry as the primary lever that we wanted to focus on.
And during that journey of a year that you described just now, were you already the three of you, or how did you find each other during the journey? And if so, who started?
Yeah, so Jeremy and I were introduced in the spring of 2016 through a mutual friend. And Jeremy and Ethan actually went to university together. And Jeremy and I linked up, and with Ethan over this, I guess, past almost 2 years now, we've been on the journey together.
And so you ended up on how to bring agroforestry to scale, basically. And can you walk us or me and the listeners through what you ended up developing and what you are currently, of course, it's still under development, but what are the main, what can you offer a farmer? Let's say I'm a grain farmer somewhere where you're operating. What's currently the process to start getting more trees, productive trees on my land, which I don't have at the moment. At the moment, it's just a flat grain land without any trees, unfortunately.
Yeah, absolutely. So the first thing that we do when we work with farmers is start with their goals. We have our first program that every project goes through is what's called a subsoil, which is our name for it, which is an audit that allows us to determine what the farmer's goals are, their existing operation, and a system design that fits that operation and that within the budget price points and their goals for how they want to deploy those trees over time. And then there's some other stuff that we do in the background as kind of assistance with regards to market analysis to determine the market for those trees, through to management workflow analysis to make sure that the labor that will be applied on that project will be there and it will be properly executed to bring those products from those trees to success in the marketplace. And then from there, we have two vehicles that are, depending on the farmer's goals, we utilize to deploy those trees. One is a debt vehicle, which specifically for farmers that want to own their own system on their land and operate their own system, where they pay over the course of a 3 to 7 year term for trees that will be deployed over the course of that time frame across their landscape. Over the course of that time, they're buying into that system. We're assisting them through to the deployment. After the deployment, they take on ownership, and then we have kind of softer market help that we provide as a service with regards to things like helping them get their products from those trees to market. On the other side of it, for farmers that don't really want to operate their system, they're focused heavily on grain or grass-fed beef, but they still want the benefits of the trees and then potentially some passive income. What we do is we enter into a profit share partnership and take on the equity in those trees. We do this through taking on a ground lease for the footprint of the trees and a very low cost, and then they actually engage in a profit share partnership on the returns coming off those tree crops in the long term. What we do is then bridge project level finance requirements by bringing in outside investors to make up the capital requirements to operate those trees over their lifetime. And those are the two vehicles that we have that bring trees to the landscape. The goal really being to have productive, economically viable, and with tree crops with an ecological underbelly that provides inherent ecosystem services in the process.
And what kind of trees should I imagine as a farmer? What can I imagine that you are working with now that you could promote to me, and what would that look like in terms of products, what you mentioned?
Yeah, so we primarily focus on fruit, nut, and timber trees. So which trees would go on which landscape is dependent really on the goals of the farmer. So if the farmer is a very sociable person that, say, runs a vegetable CSA and has 10 acres of pasture that they want to turn into orchard, then apples or any type of pome or stone fruit would be a good fit for them.
Why is that?
So the apples would be, or any type of fruit would be a better fit for a more social farmer, just because of the amount of management needed to maintain the system. The amount of labor hours for an apple tree to fertilize, spray compost tea, prune it, and harvest every year is much greater than the time requirement to plant a timber tree, prune it every few years, and then manage the final harvest after 15 or 20 years.
So it means that if a farmer likes to have people on his or her farm, apples might make sense. And if they don't, then probably another type of tree is more appropriate.
Yes, yeah, exactly. So timber would make much more sense for someone that is much farther away from markets or doesn't necessarily want to interact with more employees. So, say poplar timber or locust timber would be a good fit.
And a note on that also is a lot of the conversation isn't around what the financial goals are around these trees. And if a farmer wants higher returns, given the footprint of the trees, fruit is a far higher return, but a lot more management risk. And then you have timber, which is a lower management risk, but a lower return relative to the footprint. So it is a question of what with the goals of the farmer in mind, with the goals of the project in mind, and the soils and what can be possibly planted in those areas. What is the best fit, and that's all discovered through the audit process.
And in terms of the market for the products, what do you see are the big developments in terms of fruit and nuts and also timber in the US where you're operating? Is there a strong push or pull, depending on how you look at it, towards local and more regenerative? Is that something that brands are starting to look for, and thus working with you guys would be interesting?
Yeah, absolutely. It's a great question. There's a lot of movement, I think, on the side of where brands can play a role in this, and it's something that we're actively thinking about and pursuing. So from the perspective of where a brand might play a role, there's definitely a piece in terms of connecting with what we would define in our office as the aspirationals. This is typically it's a consumer base of essentially it's like millennials plus, and these are the very conscious consumers that are looking at the inputs of how their food is grown. They're typically more on the organic side. These are the consumers that are looking for products that provide some sort of social or economic value back to a specific theme, whether that be environmental or educational, or I know water is a hot topic as well. So where brands play a role and how we engage with brands in that process is bringing buyers earlier to the discussion. And what that means is we're looking at these complex supply systems that brands are engaged in terms of the development of their products all the way through to the sale of their products. And the way in which we're understanding this discussion is that by bringing brands in and buyers into the discussion earlier, there's an opportunity to engage in pre-purchase agreements that allow to create some certainty for the farmers that we're working with in terms of putting those trees in the landscape. Now, in the world of solar, this similar kind of framework of thinking was taking place through the concept of the power purchase agreement.
Yeah, it was going to be my next question. Yeah.
Perfect.
So can you walk us through that? How would that agroforestry and solar seem to be? I mean, they're both a solar business as trees use their leaves, obviously, but maybe that's a bit far-fetched. Can you walk us through the similarities and why it makes so much sense to go towards those purchase agreements, and what can agroforestry learn from solar, which is a bit more ahead?
Yeah, absolutely. A few nuances in the model as a whole, the kind of model off of solar. First and foremost being that in the landscape, a farmer or a landowner can own their own system and pay in to that system over time, or they can lease their land to some sort of installation company that's selling into a utility. And a lot of what gave the certainty for bigger financial institutions to come in and start lending into these markets is because utility companies were taking commitments through things like the power purchase agreement. And as a result, you have a certain buyer, you have a certain market that at a base price that energy is going to be sold in, and that provides a little bit more certainty for investors to actually put their money in place. And how we kind of learn from that in agroforestry, trees like solars are long-term assets that provide year-over-year income generation. And though we have a lag time in production, which is really the biggest barrier for us, we can utilize pre-purchase agreements to build certainty such that 3 to 5 years before the trees start producing, we have commitments in place to build certainty in the market. And that allows us to say if we plant 100,000 trees next year, those trees have buyers in place, or at least a percentage of them do set in at a certain price. And there's a whole slew of kind of nuances to what makes a good pre-purchase agreement and how that builds better certainty for investors. But the way in which the general concepts are very closely modeled to the solar industry.
And to add a piece to that, one of the fun pieces about this and why trees offer so much excitement is on the side of, as brands are engaging in this process, there's certainly the economic value that can be driven. And as those trees are growing, and there's an extraordinary amount of ecosystem services that take place. And from the perspective of some of these companies that are looking to engage in either a more transparent supply chain, or as we'd like to call it, a supply web, or looking to increase their engagement with sustainability and have aggressive strategies around how they might go and do this in terms of reducing carbon emissions and whatnot. A piece of this is in the earlier stages as we're looking at that economic lag time with trees are taking place. The perspective of engaging with the passion points of consumers, the systems that we're looking at offer a nice touch point both on the engagement with consumer side and on the economic value side, and kind of covers a full range of valuable assets, both tangible and intangible assets that can be utilized from the perspective of a brand that's engaging in this type of work.
And in terms of concrete brands, because you're a relatively young company, can you share a bit of maybe some names even, but if that's not possible, obviously not, of brands type of brands you are working with that are engaged with you to see how they can get many more trees in the ground?
Sure, absolutely. And this is a constantly moving process. One of the brands that we're excited to be working with is a brand based out of Quebec, brand in Boneka. They're a personal care brand, and they're looking at the value of apple cider vinegar for shampoo and conditioner products. One of the ways that we're working with them through this is producing apples on a farm in southern Quebec. That those apples will go direct into their supply for the creation of these apple cider vinegar based products. Now, there's an extraordinary amount of carbon offset, or what we like to consider a carbon inset, meaning those offsets that are taking place, so the reduction or the carbon sequestration that's happening there is built directly into the productive trees that are going direct into their supply web. So this is a brand that we're working with, and we're really testing out the model and working very closely with these folks on how this works. And there's a few other examples of brands, some in the hard cider space that are also apples direct to hard cider creation and then selling that product. So there's a lot that's taking place, an opportunity for different brands to get engaged, and we're increasing opportunities for brands of larger magnitude to engage in this type of work.
And in this case, the brand in Quebec, how does it work? Are these apple trees are already in the ground, or these are extra trees that are planted because you're working with the farmers and the company on the other side and basically connecting them and making sure these trees go into the ground? How does it work in practice? Or will it work maybe? I don't know how far you are.
Oh yeah, no worries. So that family farm currently runs not an organic apple orchard, but a conventional orchard. And what they want to do is add an organic system into pasture land. So where we are right now with them is in the orchard design process, and not just the physical design of the orchard and what that looks like in terms of soil prep and planting and the overall implementation, but modeling the installation costs, the management costs, and the harvest costs put together with the expected revenues such that they can understand the present value of the system and what that's going to look like over time.
So these will be apple trees, apple trees into a rangeland basically that currently doesn't have any trees in it. This will be a mixed livestock and apple system.
Yeah, so there aren't livestock there right now, although there could be in the future. It's a forested biome, southern Quebec, so it's not like Saskatchewan or Alberta, which is mainly grassland. So it's a pasture that will be adding apple trees to not create a forest once again, but create a anthropogenic forest, which is usually just called an orchard.
And what's the reason for the current non-organic apple orchard to not convert?
Yeah, so it's actually really difficult to convert a conventional apple orchard to an organic system. It takes between 8 and 10 years to do that. And that lag time generally renders the process to be not profitable at all.
You basically have to start from scratch.
Yeah, it's easier to start from scratch. Actually, during alcohol prohibition, at least in the United States, the government had all of the old heirloom cider orchards cut down and replaced all of that apple orchard with conventional production of a few select varieties that most consumers are familiar with. But that was the beginning of the era of 100% conventional production when organic wasn't even a known term. So we've largely also forgotten how to grow organic apples, and rebuilding that industry it's a challenge in the Northeast, but it's also an opportunity.
And just for some reference on that, organic apples in the U.S., as an example, have been growing pretty fast over the last 10 years, upwards of 13% over the course of the last 10 years.
Yeah, there's a fun history on a lot of the lineages of how this all works, and we can definitely geek out on the details of what the history and the historic value of some of these different crop types in the United States are, from apples to chestnuts and beyond.
One of the things I do want to recognize on that project with Oneka is we've had the chance to partner with two other great organizations, Regeneration Canada and Docter, who are working on the soil side and the carbon offset side of that project to kind of bring it to a public audience of what a project can do. And they've been great partners in that process as well.
And how many trees are we talking about, just to have an idea, and how much shampoo is that?
Yeah, so we're starting with 2 acres, and then each year we're going to be adding additional acres there. That's anywhere from 60 to 100 trees to 140 trees per acre, depending on the size of the tree, because apple trees vary in size from anywhere from 8 feet tall to 20 feet tall. We're actually not shampoo producers, so we're not sure how much shampoo that will produce, but it will be more than enough vinegar to satisfy Oneka's needs for now, we anticipate. And the apples that will turn into vinegar will likely end up being the B and C grade apples. So the highest quality apples can actually be sold just as dessert apples to eat fresh out of hand.
Ah, wow. So it's a really multifunctional.
And it's worth mentioning that there's kind of multiple. Right now, what we're seeing is a lot of the smaller brands wanting to play around in the space. Brands who are growing pretty fast, but have a really strong team ethic around soil regeneration. And the big players tend to move a little slower, but the conversation is really starting to shift into larger and larger brands over time. For example, Patagonia and who else was part of the regenerative organic standard, and Dr. Bronner's.
Dr. Bronner's. Yeah, I interviewed Les a few months ago on regenerative agriculture and why they're moving so aggressively in a good way into that space. It was very interesting.
And one of the big leverage points that they have is by bringing their purchasing power to the table.
There's a lot of fun that can be had in the way this all operates and who's at the table. And the way that we really think about it is this discussion that's being had around regenerative agriculture, all the way from where brands are engaging to where the finance community can engage to where the farming community is engaged, is in order to get it done at the scale that we think is possible, it's really about bringing all the stakeholders together and seeing the value of everyone at the table and really listening to one another and understanding what those leverage points are, so that as we work together with our different organizations, there's an opportunity to really bring this movement forward in a way that serves our businesses, that serves our livelihoods, and that serves the planet.
Oh, that sounds great. And I want to come back to the chestnuts later, as I keep hearing them in regenerative agriculture circles. But I want to focus a bit now on the company itself. So you've mentioned you're relatively young, but at the same time are having all these extremely interesting discussions with larger and smaller brands and a lot of farmers, and are planning, I think, to plant quite some trees this and next year. So if you look 1 year ago into your company, but also the larger regenerative agriculture space, what has changed since February 2017 and February 2018 as we're talking now?
Oh, wow. That's a big question. When we look back a year to a year ago, where we were and where the industry was, we were looking at an industry that was in a lot of ways still just beginning to organize around what was occurring. Different industry leaders trying to forge the conversation forward. And it was still pretty young about a year ago, but things have seemingly rapidly moved over the past year, at least from what we've seen. As a company internally, right, about a year ago, we were looking at a broad spectrum of different solutions that may be leverage points for where we can bridge investment dollars in the space. And a year to today, right, we've landed on what we think is a really good deployable solution for investors. And we think a lot of the industry is starting to mature in that way, and finding some standard operating procedures and standard operating metrics for what would make a successful industry around regenerative agriculture. So we're pretty optimistic with the growth that we've seen in the last year.
And if we would take it 1 year further, so February 2019, what would you like to have achieved in terms of Propagate Ventures?
This isn't a perfect world, right?
Yeah, you can dream.
I think there's a few things. I think that right now there's a lot of scared scared is the wrong word. A lot of patient money waiting for solutions that help mitigate risk and increase liquidity into this market, into this new emerging kind of set of assets that help steward regeneration. And I think in the next year, we're going to really see some kind of, and us being, we think, a leader in this, kind of some of these companies that have proved out their models and can bring investors a little bit more certainty to the table, such that a little bit more of a wellspring occurs where investors start to feel this is a more certain market for them to put their money into, especially in the long term, because a lot of what we're talking about is 10 to 20 year investment cycles on some of these assets. So I generally speaking, a year from now, what we think is going to be seen is a lot more investor readiness to come to the table and help scale some of these solutions that we're talking about.
And to add there, and then where we think we sit and where we see our value in the industry is kind of to relate back to solar a bit. In the early days of solar, there was a lot of conversation around solar emerging as a new asset class. Now we're pretty confident that the same can happen in regenerative agriculture, and where it sits of where we are as a company is focused on agroforestry as an asset class within this wider context of regeneration. And being one of the folks that can help bring that forward is something that we pride ourselves on, and it definitely probably keeps us up at night, but also keeps us smiling during the day.
So how would it work let's take agroforestry, because it's a bit more focused on regenerative agriculture, as an asset class? If we look, now we go way forward, 10 years from now, how would it look like as an asset class if I'm an impact investor and I would like to have it in my portfolio or maybe all the way throughout my portfolio?
Yeah. So the way in which we're kind of building this out in our company is as a fund model, where deployments can be done across a multiple sets of different asset types and crop types. Some that are shorter term, faster term, and that provide not as big of a return or a different type of return profile, depending on the tree types that we're planting, and depending on the vehicle, whether they're focused on the debt side or the equity side, to provide a little bit more diversity into what they might be able to choose their risk allocation is. For us as an organization, really what that looks like is being able to raise a fund that has pretty large scale for deployment, because we're talking about managing trees over their lifespan, and giving investors the ability to have stable returns at a competitive rate, whether that be something between 5 to 10% on their investment, so that way they can come in and have a little bit more confidence. The goal is to be able to do deployments in a more stable way, so that we undercut a lot of that risk through engaging a lot of stakeholders, because we have the capital requirements to make those deployments possible. And that's bringing in brands and buyers at larger and larger levels across the supply chain, building kind of subgroups like co-ops that'll help with some of the buying infrastructure in the middle, at the ground level of production. And there's a whole slew of different kind of structures that are built around the base structure of a deployment model, similar to solar.
And what would that mean in terms of, because you have so many different tree types and so many different products also coming out of that, would it all be mixed into the fund to create that diversity and to create the maybe slightly earlier payouts, medium payouts, and later payouts, because trees have obviously a different lifespan? Is that an idea to put that together and create a more stable thing for investors? Or you're going to split it up because I'm very interested in chestnuts and you are very interested in apples and you're very interested in timber, for instance?
Yeah, so the way in which we're starting currently, so kind of build you up to where we think we're going to go. Currently, we're looking at direct investment opportunities in specific projects.
So a project comes up and you're suggesting that to investors.
Right, exactly. And we're building kind of direct investing vehicles that provide different variable terms depending on what we're putting in the ground. That's kind of the initial stage that proves out kind of how we're doing deployments.
And how are investors responding to that?
Yeah, they're looking at it as a long-term investment. I think the current stage that we're at, a lot of investors are pushing toward fruit production because it provides shorter return time horizons and higher return rates. But they're interested in it as a concept currently, and are willing to play at a lower scale to prove it out. So we've got a lot of positive reception on that front. The long-term goal, as we build out those portfolios, is to be able to provide a fund layer that works across both sides. And the reason why we think that makes a lot more sense currently than separating out the different assets, whether it be different crop types or the debt or equity vehicles, is because it helps stabilize the risk, and it helps the pool be a little bit more flexible. So that way we can deploy relative to the pipeline of projects that are coming in a more stable manner. We've found that real asset funds are more interested in the bundle and having that as kind of an entirely managed portfolio than they are in separating it out and picking and choosing. The size and scope that we're talking about, we think makes more sense with them combined. When we start to break it down at the project level, it becomes a little bit more risky, and we have to manage a lot more conversations.
And the piece of this that we're finding is quite attractive is all the way onto the farm level. We're looking at diversification in terms of the farm system, and then all the way through to the investment piece. It's diversify your portfolio. So it's a lot of the similar thinking that takes play, and it's a very virtuous cycle that we think there's opportunity in.
The end goal, say 10 to 20 years from now, there may arise opportunity for us to separate those vehicles out, to give exposure across different tree types, but that is yet to emerge as a viable option at this stage.
It depends on scale, of course.
Yeah, each crop type has different scales, different levels of certainty. So we want to be able to provide broad spectrum at first before we start diving into one, in terms of giving investors the access to one specific vertical.
And in terms of investors, because I know there's many of the farmland focused funds are looking at retail investors. They might want to go public at some point, or they want to bring in smaller scale investments, go to the crowdfunding or the crowd investing route. Is that something that you are thinking of and taking into account to keep this movement, or to make sure this regenerative agriculture movement is more democratized than maybe some of the solar movement, or especially the wind movement, has been?
Yeah, it's a great question. So we actually, if we go back to the genesis of the organization, one of the primary goals was to lower the barrier to entry to being able to invest in this as an asset class. There's a great company that we like called Wonder Capital in solar that has done this pretty well, and we like it a little bit. We like the way in which they've approached this, which is there's still a minimum investment quantity that a person can put in, but it's small enough that it's accessible to investors that are not necessarily large scale. And we kind of have that similar thinking, and we view this as a viable option for that model, and crowdfunding it within that framework. Similarly, I think we're being a little bit cautious to make sure we're not over-promising and under-delivering across this, because the last thing we want to do is start selling to kind of the smaller level retail investors before we've proven out that it works at a scale that's investable.
No, of course. I mean, you don't want to run that risk, and especially as it's so early in the regenerative agriculture space, or at least in the vehicles that are investing in regenerative agriculture space. Is that one of the main barriers you see, that the barrier to entry for investors is relatively high? It's what I've heard in some of these interviews, is the barriers, the minimum is relatively high, which means you're by definition speaking to a very small group. And that limits the amount of people that get enthusiastic, obviously. Yeah,
I think you're totally right on that. And the cost of acquiring the capital is also very high. So you kind of have a little bit of a problem in the early stage, where you're talking everyone that's trying to get money from a very small group of investors who are interested in catalyzing this movement are all in some ways competing for those dollars. We like to think that in a lot of ways, what we're doing is an ancillary benefit to a lot of the existing infrastructure that's being put in place. So it kind of as a bolt-on. The thing that's also worth saying is we think that there is a huge amount of consumer interest at kind of the smaller levels of retail investment in this as a model. We've seen that from different investors that we've talked to, different kind of smaller scale kind of wealth that we've talked to. They want a little bit more certainty before they're willing to jump in, but they're really interested. So we think that the interest is there. We need to build out the infrastructure for them.
Yeah, I see that here in Europe, where there's almost a second wave of solar now leads to quite some platforms where you can actually, starting at very small amounts, start lending to solar and wind projects. And finally, as a retail investor myself, have access to that even with a few €100, or in some cases even 25, or in some cases 1,000, but slowly get access to these 5 to 10 year loans with a nice payback that are part of the solar movement. And maybe 10 years ago, that was absolutely impossible unless you were a pension fund or a large bank. So you see that, but it takes time, because obviously it has to be much more secure for retail investors. And that luckily, because otherwise we would have a problem. But it's exciting to see where at least solar has gone to, and agroforestry, as it's much more personal and much more close to many people, as we are all eating 3 times a day, and electricity is not that sexy at the end. I think will be very interesting to see that movement play out and see the combination of impact investors accredited and smaller, more crowd-based investors, especially as you're working with brands that have a very passionate crowd.
Yeah, absolutely. We're right aligned on that. We think that agroforestry and this asset class has a broad spectrum appeal. That the general engagement from the consumer is going to be pretty high, especially when brands are involved in the process.
And to ask, I mean, I have a few final questions, but one, what are you excited about the last few months you've been working on? What kept you up at night, or what are you launching in the next few weeks that, of course, if you can share that, but that's something that's really, really on your mind at the moment? What is happening at Propagate Ventures as we speak?
Aside from chestnuts?
Then I was going to ask about chestnuts, but I was going to ask first about if they're chestnuts, we can kill 2 birds with 1 stone.
Yeah, so it's February here. It's going to be March pretty soon, and then it's going to be April, and the spring thaw is coming, and you really only have 1 chance per year to plant bare root trees, so trees that are shipped without soil on the roots. And before that happens, you often have to do a lot of ground prep. So we are...
And just to be clear, that 1 chance is spring.
Yeah, that 1 chance is spring. And that might seem far away, but for us, it definitely doesn't. And while we are an investment management firm, we're an agroforestry investment management firm, and that involves ground prep and planting trees and being outside. So that's something we're looking forward to for this spring.
We cannot express how much we enjoy being outside of the city and in the landscape, putting trees in the ground.
And to add on that, and this is definitely something we chat about. It probably keeps us all up at night. Is there's a cultural component to the value of trees and like the interaction of the natural landscape or nature and the human economy. And we think that the best ways to engage with that is like through the food we consume, through the materials we use to build things, the medicines we consume, etc. And oftentimes, to kind of go back to where we started this conversation around the importance of soil, that does come back to soil, and trees are a huge part of that value add. And so it's something that we think about, or like the cultural significance of being able to kind of have fluidity between the city landscapes and the natural landscape as humans as a species start to move forward and continue to upgrade the way in which we interact with each other and with the natural world.
I hear you. I'm in an office space and looking at a window at another office space and can wait for tomorrow afternoon where I can get out of the city and into the countryside where friends into the mountains actually where friends have a house. So that's something that I share, and I think it's even, humans looking at a tree already reduces your heart rate, which I think says enough about the incredible value they have to us on all sides.
Absolutely. I know one of the things in New York that everyone seems to love to do around the fall is everyone seems to rush to the orchards to pick apples and then rush back to the city. We think it'd probably be a little bit more fun to spend a weekend on the orchard, throw up a tent and camp out in the orchard. We've done that before, and it's quite a nice experience.
And so to ask my final 2 questions, because I want to be conscious of your time as well. What do you have with chestnuts? And then we'll get to your advice, or your advice to where passionate and interested and committed impact investors should start if they want to get involved into agroforestry and regenerative agriculture. But let's start with the chestnuts.
Yeah, so I can take the chestnut question. So there are people want to eat more chestnuts than there are chestnuts grown. China and Turkey and somewhat France and Italy, and a little bit of Chile are the chestnut exporting countries. But in the United States, for instance, 100 years ago, a blight, a fungus from Asia came in. It's called the chestnut blight, and it killed 4 billion American chestnut trees. That's 4,000 million for the UK folk. So we have this chestnut culture it's nascent, but it's also it's in a period of renaissance. So people want to eat chestnuts. The trees don't yield for a long time, so they're particularly well suited to our model. But chestnuts themselves are a caloric tree crop, so they're a staple crop. It's like corn that grows on a tree. So they're a little bit different than apples. They're less perishable. They're easy to ship, and they taste great. So Chinese chestnuts are a little bit less starchy. They're more sweet than European chestnuts. So you get flavors of sugar snap peas or maple syrup. The more they dry, they take on lots of complex flavors. So yeah, chestnuts are near and dear to us.
And so we can expect them to be introduced in some of the systems and some of the farms you're working with in the near future.
Yeah, what it really takes for them to be successful are chestnut hubs. So there are several in the U.S. The largest one is in Ohio that goes through or has capacity for 200,000 pounds of chestnuts per year and goes through about 100,000 pounds this year. And within the first 24 hours of opening this year, they sold 60,000 pounds of chestnuts. So there's definitely demand for it. And even if a larger co-op is more viable, the retail price per pound is $10 a pound, where organic apples are at $3 a pound. So they're a really easy product to sell for anyone.
And just kind of on a broader note there, right? As a company, we look at both kind of existing, well-established market crops as well as emerging market crops. And chestnut, as one here in the U.S., has been reported growth year over year. We as a country, we are currently underproducing and can offset imports by planting about 5,000 acres of chestnut trees, which is about the equivalent of, I think it's 250,000 chestnut trees, which isn't a lot, relatively speaking. So we think we can get to at least offsetting the import market here in the U.S., if not more so, and growing that market.
And as consumers start demanding more gluten-free style products, chestnuts happen to make a really wonderful flour, which has all sorts of wonderful baking properties. They happen to make some of the most delicious crepes you've ever had. So as consumers demand these different types of products and the markets shift, we need to make sure that the supply meets that demand. And they're both the consumer engagement on this side all the way through to the investment opportunities are in the beginning phases of starting to match up, which is one of the exciting things that we think about chestnuts. They're just pretty cool trees.
And would it be something that you can introduce into a cornfield?
Oh, yes.
And as a farmer, I'm going to ask, it doesn't hurt my yield, right?
So yeah, there's a few nuances in the way in which you manage. So if you're alley cropping with chestnuts and you're growing something in the row between the chestnuts, until the chestnuts grow up to an age where they're going to take over the canopy, they won't hurt your yield. And then as they get to a stage where they're old enough, they will take sunlight away. But depending on how wide the alleys are, you can plan for your yield and reductions. And from some of the research that we've seen coming out of France, you can expect comparatively to just growing corn or the existing crop, you get about 140% of the total yield off of a given piece of land by integrating trees, which is a big increase in production on one piece of land.
Wow, yeah. And especially if you look at the value that it gets compared to what you're growing in the middle.
Exactly. the margins on tree fruit and nuts is much higher than that on an annual grain, for sure.
Very exciting. I want to end with one question, which could open a whole other can of worms, but what would be your advice? Let's imagine there's a whole group of smart impact investors listening to this podcast that are ready to deploy their capital, ready to make their first steps into regenerative agriculture. Where would you suggest to start for them? Where to look, what to avoid, what not to do, and especially where to get started in this?
That's a great question, and one that has it's a very difficult question to answer. The industry is still very young, and it's a multi-stakeholder problem. Depending on what they're looking at, they could be looking at anything from a grass-fed beef herd extension or bison herd extension, through to a piece of land that you can potentially appreciate in value through companies like, for example, Farmland LP or Black Dirt Capital. So what we would look for is a really good strategy that takes the long perspective, trying to appreciate the asset of the land itself, but also provide productive current income yields off of the land. With an ecological underbelly across that. The way in which we like to think about it is if it's not economic first with the ecological underbelly behind it, it's not going to be something that that we would look at as being a way to steward investor capital.
And in our experience, one of the things that we're certainly thinking about is what's the value creation for the next 7 generations, for example. And the indigenous communities here in North America and across the world are particularly good at and the way their culture operates in terms of having this type of thinking. So on the like investor front of what are we thinking about in terms of our investments, it's to really look forward for the next generations. I mean, I certainly know that, for example, in like chatting with my folks about what we're up to at Propagate, and then the conversation moves into like, hey, Dad, how about like your great-grandchildren? They're still going to be seeing value from the trees that we put in the ground today. And that starts to change the thinking about what's the future that we're making sure happens by investing in it strategically today, but also in a way that creates economic value in the shorter term and creates value across the very long term for all the communities engaged and all the stakeholders. So it's really about at least in our sense, about the framework in which we're thinking about this and how we want to kind of embody the culture that sets forth in motion what the next generations will have to their advantage.
And on that note, it's helping, like if an investor were to come to us, really it's a question of their goals and seeing where that might align in the industry as a whole. There's a lot of opportunities. It really just depends on what the investor's looking for. Are they looking for their grandchildren, their great-grandchildren, or are they looking for a 5-year return? If you're looking for a 5-year return, regenerative agriculture might not be the industry for you.
Yeah, I want to thank you so much with that note to finish this interview, and thank you for your time, your honesty and sharing so much. I'd definitely be checking in with you guys to see how all those plans are going and how we're getting closer to the big fund and how we're getting closer to a much more regenerative agriculture sector. So thank you guys so much.
Absolutely. Thank you very much. We appreciate you taking the time.
Yeah, thanks, Koen. And for all the listeners, feel free to reach out on social media or on propagate.org. That's our news site. So we're posting new content every day.
I will link everything below. Yeah.
And all of the above. And hopefully we'll have you to share your insight and experiences on a podcast one of these days.
You just listened to an interview with Ethan, Jeremy, and Harry, founders of Propagate Ventures, working on planting many, many, many productive trees on farms. I hope you enjoyed it as much as I did and think slightly different about chestnuts, cider, apple, and shampoo. Thank you for making the time to listen to this podcast and making it all the way till the end. I hope you enjoyed it as much as I did. If you found the Investing in Regenerative Agriculture and Food podcast valuable, there are a few simple ways you can use to support it. Number 1, rate and review the podcast on your podcast app.
That's the best way for other listeners to find the podcast, and it only takes a few seconds. Number 2, share this podcast on social media or email it to your friends and colleagues. Number 3, if this podcast has been of value to you and if you have the means, please join my Patreon community to help grow this platform and allow me to take it further. You can find all the details on patreon.com/regenerative agriculture or in the description below. Thank you so much and see you at the next podcast. Dear friends of the podcast, I'm super excited to share with you the online video course Investing in Regenerative Agriculture and Food. How to put money to work in regenerating soils at scale and growing a lot of tasty food while doing it. Why are we doing this course? After 100 interviews and more than 100 hours of audio asking the question how to put money to work in regenerating soils, and have been following the space since 2011 and recording this podcast since 2016, we thought it was time to share our lessons learned. What have we seen in the space over the last years? How have we built our decision-making framework? What to focus on with the podcast? How have we picked interviewees? And what questions should you ask? What is happening in the space? What should you read? What should you listen? What should you watch? How to approach this space? For whom is this course? You, the soil builders and investors in this space. The soil builders, people working in this space, entrepreneurial farmers, fund managers, vehicle builders, crowd investing, platform builders, agtech companies, farm-to-gut food companies, permaculture, keyline designers, holistic management consultants, etc., etc. People that are building soil at scale. And the investors who are putting their own money to work through their family office or as private individuals, or people who are putting other people's money to work through foundations, institutional capital, banks, insurance companies, etc. Is this course free? No. This is pay what you think it's worth. Meaning, I have no way of knowing what this course will be worth to you. And I'm very aware that among the listeners of this podcast, we have people with very different means. So I'm inviting you, if this course is creating value to you, and if you have the means, to consider paying what you think it's worth. Thank you. So what is this course? It's currently a series of 17 videos, mostly ranging from 10 to 15 minutes, plus PDF slides, so you don't have to ride along. We're gonna look into why invest in regenerative agriculture and why extractive agriculture is so risky, how to invest, what kind of frameworks you could and I think should build, what to invest in, what kind of co-investors you could find, or what kind of investors you could find if you're a soil builder. Every lesson will have a digging deeper part where I will share what kind of reports, what kind of interviews, what kind of videos you can look into if you want to dig deeper. We're going to look at nutrient density, landscape design, and a lot more. So what is it not? It's not a list of investable deals. Unfortunately, that doesn't exist in this world. We're really at the beginning of the regenerative agriculture and food revolution. It's also not investment advice. Before making any investment, please find professional investment advice. So get ready, get a cup of coffee, a cup of tea, or whatever you're drinking. Click on the link below, sign up, and I'm really looking forward to your feedback.